going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, we actually have some breaking news for Bitcoin. It is a Bitcoin victory. You might not know what I'm talking about, but it is big news nevertheless. Now, we also have seen some things going on that are very interesting on chain recently, especially with the Bitcoin holders as well as the miners. We've also seen the liquidity shock continuing. Also, friendly reminder, guys, we are less than half a year away from the Bitcoin halving. And, obviously history shows that leading into the halving, it genuinely isn't this crazy massive blast off move, but we do know that if we get these ETF approvals and we have the lack of Bitcoin on exchange and we also have this decrease in the Bitcoin distribution being produced on a daily basis, well, this could lead to some massive numbers. In fact, there is a $5 million Bitcoin prediction in today's video. And is it possible that Bitcoin could actually surpass the market cap of gold? Well, we're seeing things we've never seen before. And I want to tell you why this cycle may specifically shock a lot of the naysayers and shatter a lot of the expectations, of course, in a good way. And also something else that's going on is you're realizing this shift that the old ways are dying, right? The Charlie Mungers and the Warren Buffetts of the world are finally starting to wake up to the power of Bitcoin and cryptocurrency. And I have so many clips I want to play for you today, guys. And I think you're going to really, really appreciate this because what we're seeing is this new solution, this new paradigm, right? So lots of things I want to talk about today. And of course, there is the fact that we may also have a Bitcoin, a little bit of a Bitcoin dip. Should we be worried? Or would that probably be an amazing opportunity for accumulation? So if that sounds good to you guys, thank you so much again for joining me on this crazy crypto journey. I love you guys. You're awesome. Let's dive in. And we will start with this chart right here. So Glassnode points out the long-term holder sell-side risk ratio. So the Bitcoin supply is historically tight with an all-time high in coins held by long-term investors, and impressive rates of accumulation are taking place right now. So why are we seeing all of this happen all of a sudden? And why is it a little bit different than it generally is? Well, you could see right here, they show an unusual acceleration of these long-term holders as well as actually short-term ratio following the stabilization right here as well. And, if you just have a simple look at these heat maps, look at November right here. Obviously, it's interesting. It's a heat map, I guess, but blue is really the higher amount, so it's not really like fire colored. But long story short, look at all of this blue. Look at all of this accumulation happening right now. And if you just come over to Token Analyst, you can see right here, look at the balances on exchanges for the last 30 days, okay? Down 10%. Inflows down as well, outflows up, but remember, outflows are going out, so that's why it's green. So this means everything is flowing out, and the inverse is happening with the miners. You can see the balances up 20%, inflow up 47%, outflows, down 10%. Again, you have to flip this around the other way. But yeah, you can see right here, balances falling, miners accumulating. So this is also leading to that liquidity crunch. You can see Bitcoin addresses with over 1,000 of Bitcoin have hit records of 8 million. So there is obviously something happening right now and no one's talking about it. In fact, I'm not gonna lie. I did finally get one person finally reached out to me and actually reached out to my girlfriend and was like, hey, does Kyle still do all those, does he still do that Bitcoin stuff? And she was kind of asking about doing some Bitcoin stuff. So one person has reached out. So I wouldn't say that, they're coming in droves just yet, but who is starting to pay attention is, as I posted over on my X account, the weekly crypto asset flows. This is from CoinShares, and you can see that we had 6 consecutive weeks totaling over 260 million, bringing the 2020 year-to-date total to 767 million. This is 30 million more than the entire year of 2022, and we still have 2 months left. So obviously the interest is mounting. Now, if we head on over to this interview that our good old buddy, Michael Saylor, today's a little bit of a Michael Saylor day. I got a couple of things I wanted to go over. So, he's over here on Fox Business, and he's not just talking about why they started to accumulate. He does go into his story, but I'm going to skip that part. But what he's talking about is this new paradigm, this new shift, the new way of doing things, and why the old ways aren't working. And just think about when you get these ETF approvals, now all of these, boneheaded financial advisors that have been so scared to touch crypto all of these years, now they're going to start recommending it, right? Oh, we definitely recommend a 1 to 3% allocation, maybe even a 5% allocation. So I'm going to turn it over to Saylor. He has a little bit at the end, but this is really why he's saying that, the times are changing and, you're going to see businesses putting it on their balance sheet, right? But anyway, I've been talking too much.
Michael, you tweeted a very compelling tweet on November 4th about Bitcoin offering corporations an innovative strategy to preserve the capital, sort of what you just talked about. But what I thought was even more compelling is you said to escape the destructive cycle of expensive acquisitions, buybacks, dividends, and debt. Those are all the traditional ways companies are told they can reward shareholders. You're saying skip all of that and go straight to Bitcoin.
Yeah, what I'm saying is, decapitalizing the company by giving the capital back in a buyback or dividending it out and paying the tax on the dividend or engaging in dilutive acquisitions or pursuing breakneck growth initiatives that may or may not work. All of these things are part of the conventional corporate finance playbook, but they don't work. 99% of the companies are failing using that, and they do it because if they just hold their capital in government securities, they generate 3% after tax, right, and the cost of capital is 12 to 15%. So Bitcoin is the solution because you can buy Bitcoin, ride a 20 to 40% tax-deferred appreciation. You can beat the cost of capital. And pretty soon you're firing on all cylinders because your balance sheet is generating investor returns as well as your P&L.
Before I let you go, Bitcoin on a tear right now. What do you think over the next year? What could be some of the drivers that take it higher?
Look, the supply and demand are in balance right now, but after the halving in April, the supply gets cut in half, and after the set of spot ETFs come online, the demand's got at least double. So the only thing that's going to adjust there is the price in order to get the market to clear. And so I think you watch the spot ETFs and you watch for the halving, and the next 12 months are pretty auspicious for the asset class.
If you don't believe Saylor, I know Saylor can be a little eccentric. He's a little crazy sometimes. Well, we also had Luke Gromen. Now, he was over on What Bitcoin Did, and he was discussing why it's not worth buying these things, long-term debt of a country running 14 to 20% GDP deficits, and why what we're looking for is hard assets, and how even gold is not really looking as lucrative as it used to, and how more and more people are shifting into Bitcoin.
You don't buy the long-term debt of a country running 14 to 20% of GDP deficits when they're a twin deficit nation and they're in recession. You don't. That's like, I can't even think of what it's like stepping in front of a running truck. Like, you buy hard assets. They're going to inflate like you can't believe. And that's what I think, that context that, again, could bonds rally at the long end? A little bit, sure. But I just think the 40% rally isn't going to happen because the supply is going to rise. And going back to the initial point, as the dollar rises, as it tends to do in a recession, that's going to reduce foreign demand as well. In fact, it's going to force them to be selling at the same time. So like the effective amount of absorption, the deficit might be 14%, but you might have another 3-4% of selling from foreigners and from U.S. banks and from U.S. pension funds that are sort of upset. And you say, well, the Fed will just buy it. Like, okay, yeah, then why the hell am I buying the long end? Why am I not buying Bitcoin? Why am I not buying gold as my duration exposure? And that's my view. It's like I get, okay, I want to own some duration if there is a recession, but I don't want to own long-term treasuries. I want to own gold. I want to own Bitcoin. I want to own something that's really going to respond to what they're going to have to mathematically do, which is print to finance these deficits. It could easily be double digits in America and maybe even 15 to 20% of GDP deficits.
But you might be wondering, well, then what took them so long, or why have they been so hesitant to get involved? Well, CoinDesk actually had a really awesome analysis on this, and I just wanted to read a couple excerpts of what they were saying. So they said about 15 years into the crypto experiment, institutional participation in crypto remains limited. Instead, many institutions are taking a wait-and-see approach, conducting through due diligence before taking the plunge into this new investment landscape. Among the many reasons for delayed allocations, institutions may be deterred by the opacity of the regulatory landscape, insufficiently mature market infrastructure, inadequate investment vehicles, and a lack of suitably long track records for these assets. Now, stick around. Stick around because the big news that came out today has something exactly to do with this. But this is why the tides are changing. A major reason is because incremental gains are being made on the regulatory front. For example, Bitcoin has been deemed sufficiently decentralized to be considered a commodity rather than a security. And RFK Jr., he was even saying he wanted to make it a currency. Think about that. So that means that you wouldn't be taxed on capital gains if Bitcoin was a currency, right? Because when you do currency conversions and you go, say you go to like, I don't know, you go to Europe, you're from the US or something, and during that time, the dollar gains in value. So then when you trade your money back in, you get a little bit more dollars. You don't have to pay taxes on that because it's currency conversion, right? So they say, if you look over here, they have the recent wins in courts that are establishing powerful precedents that work to establish rules. Market infrastructure is maturing with the two largest assets, Bitcoin and Ether, now being traded products on the CME. The likelihood of a spot Bitcoin ETF that tracks the price is increasing, potentially opening doors to a wider range of investors by making crypto more accessible through traditional brokerage accounts. Then you also have things like 401ks, IRAs, institutional OTC marketplaces, clearinghouses, etc. So you could see how the ball is starting to roll, right? The avalanche, right? It starts with just a little, tiny little, a little bird lands on a branch, right? A little bit of snow falls off. And then by the time it gets to the bottom, forget it, right? That's the mode that we're in right now. And we're going to ride this baby all the way to the bottom. Well, that doesn't sound that fun. You know what I mean? We're going to ride it all the way to the moon. We're strapping on the moon boots. No, I don't want to get too moon boy. Not just yet. I don't think we're in the parabolic phase just yet, guys. I do think we are due for some more accumulation at this point. And I do think that pullbacks are possible, but I think they're opportunities. But getting back to Michael Saylor, he was over here on a Bitcoin space, I think this was a Twitter Spaces, X Spaces, and basically he's talking about why we're going to see a major catalyst for Bitcoin, and he even lays out the roadmap for how Bitcoin could realistically actually surpass the market cap of gold and even get as high as $5 million a Bitcoin. So let's play this audio right now.
Look, first of all, it's going up by a factor of 10, whether they fix any of the stuff, right? It's going to be a grind up by a factor of 10 just because gold is broken and Bitcoin's going to replace gold. And now everybody in the universe knows they need a non-sovereign store of value in the form of a bearer instrument. So now they're looking, the amount of stories for last year, people said inflation may be coming. We're not sure. Now the mainstream narrative is flipped to inflation is here. You need an inflation hedge. So it's going to grind up to replace gold. It'll go to $500,000 a coin, regardless of whether they fix these things. But there are three things that are massive catalysts that cause an acceleration. And I don't think that those three things don't take us to 500,000. They take us to 5 million a coin, right? Those three things are a spot ETF where someone can go ahead and buy $100 million of Bitcoin, buy a security, an ETF security. I think that's one. Two is your bank is going to custody it for you and lend against it. And three is I can mark it up or mark it down on my balance sheet based on fair value. Pari passu. It'll be pari passu to the way I'd handle Apple stock, or at least that good. If you have property with fair value accounting, by the way, it becomes pari passu to the way you'd handle treasury bonds on a treasury balance sheet. Treasuries are better than stocks because treasury is property, whereas a stock is a security, and you're capped out at 40% of your balance sheet as security. So it would be a major, major breakthrough if you saw any of those three things. And I'll end with this one observation. I tweeted this last week, but I think it's very powerful. It's if the banks can hold this stuff on their balance sheet, then a whole new class of investors are going to buy it. People are going to put in billion and multi-billion dollar orders to buy it as a treasury asset. Nobody's going to sell it because there's no reason to sell it if you can borrow against it at LIBOR plus or at SOFR plus 50 basis points. Right, so you'll be borrowing against Bitcoin at SOFR plus 50 or SOFR plus 100 basis points. No one's ever going to sell it, and then, as I joked, you won't be able to afford it. I mean, you will be able to afford it, but everybody gets Bitcoin at the price they deserve. When the banks normalize it, and you can draw a $100 million credit line at 100 basis points from an FDIC insured bank, at that point, right, we're going to blow through the market cap of gold by a factor of 10.
Right.
So I think the best thing is those three things are highly likely to happen. I don't know if they happen in 36 months or 24 months or 12 months, but I would be shocked if it's more than 36 months. And I hope, guys, it doesn't happen in 12 months because my view is the longer it takes, the more progressive the grind, the more time I have to buy more of it.
And you might be saying to yourself, that's absolutely crazy. That'll never happen. But again, The crazy things that have happened in this space, the things that I've heard in the past, they've all come to fruition, right? We never thought we'd see a billionaire own Bitcoin. Then Paul Tudor Jones and all these other guys came out. Then Elon Musk, right? He bought some Bitcoin, put a little bit of Bitcoin on Tesla's balance sheet, MicroStrategy buying like crazy. Then we had El Salvador making it legal tender. And now we have politicians talking about it and potential ETFs coming out. Oh, and the big news of today, I want to give a massive shout out and congratulations to Caitlin Long's Custodia Bank. That's right. Their Bitcoin custody platform has gone live. They say it's a bank built by Bitcoiners, and we offer segregated, not omnibus, custody accounts on our custom-built Bitcoin custody platform. You can see right here, this is the website, and this is incredible because the battle that they went through, especially with just the Fed in general, to get this off the ground, and now you are seeing the start of banks and Bitcoin and the relationship and all of these predictions. Remember, all of these things that people said would never happen, right? It would never happen. You'll never see a country adopt it as legal tender. Well, now we basically have the first Bitcoin bank, okay? This is huge, huge news. So I just wanted to just, drop that today. I thought that was really cool. Probably not a lot of people talking about it, but it is a victory nonetheless. So, just really quick analysis again, guys. I don't want to keep harping on this, but what I do want to point out is if we kind of look at this area of the market flow, right? Look down here at this beat. Now, it's not exactly, right? History doesn't repeat, it rhymes, etc. But if you look at what we did here, right? We had this major sort of capitulation where we got our green dot, right? And then we had the money flow fall way, way, way down. We didn't actually get as low, actually, this time as we did over here. But I want you to just look at this area right here, down here, okay? And I want you to look at this area. Let me just get out of the way over here. That we're going through right here. And you can kind of see that we start coming up out of this. We put in this larger wave at the top. And then if you look at the bottom, the money flow almost has like a check, right? Where it starts to flow in, but then there's that sense of denial. So you see we go from red to green to red. And then you can see right here, we experience this massive long green area, which obviously is the, insane parabolic bull trend. And if we have a look at right here, the question is this money flow the beginning of this money flow right here as we move from the red into the green? That is the question that I'm asking right now, because as you can see, we've also had the EMAs. I believe these are EMAs. I think they are. They might be simple moving averages. I'm not 100% sure, but you can also see that they flipped and we have these white bands on the bottom, right? And if you go back historically, that's also what we had happening right here. Again, so, yes, we could have some of these dips, some of these levels. I mean, a bump and run is possible, right? We could come down and retest this area, this downward slope, right? Because you want to kind of confirm that. And, that would put Bitcoin back down at some of these lower levels. If Bitcoin went down to 25,000, I'm sure the bears would be rooting. But again, that's not really that abnormal. I mean, you could see we are at the top of this channel, right? And we've been holding here now for 3 weeks, slowly climbing. So, I mean, do we just keep slowly doing this up the channel? Maybe, possibly. More likelihood is like I said, to come down, retest, maybe have the bump and run. Maybe we don't get that. We do have this upwards trend right here of support. I just think at some point, even this 200 weekly around 28, I could just see us coming down, maybe even dipping back below 30K temporarily. But, having a look at the way that the volume range has been buying up a lot of this right here, I just can't imagine us going any lower than this. I mean, this is just so much interest, guys. I mean, what do you want to fill a little volume gap down here? You want to go down to like 25 or something? Maybe, possibly, But, for the most part, you would have to ultimately fall pretty much below around 24,700 to really start putting in a lower low, right? Breaking out of this major downwards falling wedge, which obviously we have a target of around 47,000, and I'm still standing by that. And then this second right here, right? So, I mean, we've broken out of both of the major downwards angles. So what is the next levels you look for? Well, now you start looking for those horizontal levels, right? The next level, 37,266. Then you have a little bit of interest around 43 and then 47, right? And I do think that we will continue upwards. And I think any of these pullbacks that we get here, down here, for example, we actually tested this major trend twice, right? and we really only tested it this once right here. So again, you know, could it be possible that we retest it? But the question is, when do we retest it, right? Because the longer it takes to retest any of these levels, any of these spider lines, the higher the price is. So if we just bounce around, do some stuff like this, come all the way up here, maybe we go to 41, and then we have that, you know, 30%, 20, whatever crash down to the level, well, that would only take us down to like 31 or 32, right? So, and again, guys, I know there's not really much trading that's been going on right now. If you guys are interested, you do want to learn how to trade, you can check out the tutorials. There's lots of bonuses. You guys know all that fun stuff, everything free on this channel. But one thing that I wanted to talk about was, so this is not fully confirmed yet, okay? And this is only on the daily. Obviously, we have to see what the weekly puts in on here. But what the DXY is doing right now, so this is this nice parallel uptrend. You could see, you know, perfect. I mean, literally almost textbook perfect trend. And now it's had, you know, a couple fake outs to the top, a couple fake outs to the bottom. But really what it's doing now is it's just putting in this crab pattern, right? But look at this down here. Do you see how the DXY came down here and it's coming back up here? Now, of course, we don't have enough confirmation on this. This is just a daily candle. Anything can change. But if we get a rejection at this level, okay, and you start seeing the dollar do this, that is literally what they refer to as the kiss of death. Okay, and that would mean a major reversal, I should say, in the DXY, which would ultimately probably be very good for Bitcoin and very good for risk assets. And, you know, again, just getting back to this market cipher, every time that we've had the confluence on the daily and the weekly down here, so basically you wait for the green long dot, you could take it if you want, but then you come over here, you get on the weekly chart, right? And every single time that we've pretty much had this little green dot on the higher waves right here, it has, I mean, yeah, technically it was a little bit late for confirmation if you want to be safe, but I mean, that has been the strategy. So, you know, I do believe that we are in the up environment, and I do believe that Bitcoin is going to continue to probably either chop around sideways. Maybe I think we could have a retest of 25. Maybe it's possible. I would load the truck up if that was to happen. Not financial advice, but yeah. We're not quite to the point where, you know, friends and family are coming out of the woodworks. Like I said, I did have one person call us asking about it. So yeah, a lot of this is happening in the background. No one's really paying attention really to Bitcoin right now. Nobody knows what Custodia Bank even means. Most people don't even know what a spot Bitcoin ETF is. So again, you know, people say, oh, you're late to the party. It's like, okay, I get it. You know, maybe I didn't buy Bitcoin at $5. I didn't buy Bitcoin at 10 or 100 or 500 or even 1,000, right? I bought my first Bitcoin it was around $2,000, but you know, everybody's like, oh, that's great. Yeah, but I didn't have a lot of money back then. So it's not like I wasn't buying like hundreds of Bitcoin, right? You know what I'm saying? Like I had to dollar cost average just like everybody else. And right now, I mean, you should be in profit if you've been dollar cost averaging this year. And just considering waiting for, let's say, a 50% pullback or something, like I want to go back down to 15K or something. Okay, maybe. But when you consider the possibility of $1 million Bitcoin, a $5 million Bitcoin, or let's not even get that crazy. How about just a $200,000 Bitcoin, right? Then if you look at it from that perspective, the, you know, downside risk versus the upside potential, I think is clearly in favor of the upside potential. So just wanted to bring that video to you today, guys. Thank you so much again for coming back to the channel. You guys rock. You're the reason that I make these videos. Make sure you follow me over on X. I tweet over there when I'm not making videos. I know I've taken a few days off, but you know, price action's been a little bit boring, let's be honest. But if you guys do want to learn how to trade, I mean, it's so easy to trade the bulls. I mean, the bull run is basically just long the dips, as long as you have the confluence on the chart. So, you know, check that out, guys. Until next time, stay crypto. You're awesome. And of course, peace out.